The following is a presentation of TFNN. Live at TFNN, the Power Trading Hour, with your host, David White. Now, the author of The Path of Least Resistance and the Tech Insider, David White.
And welcome to another edition of the Power Trading Hour with me, your humble but lovable host, David White. And, of course, we've got the Fed coming out with news, and the markets have pretty much dipped lower here for the first reaction. Normally there's several. Of course, we don't want to get the cart before the horse, and that is we're going to have a question and answer session at 2:30. So we've got a mere 23 minutes to wait until things start happening. Dollar index, nice little pop out here, up about 23 cents now. We're going to see gold out here pretty much flat on the day, 1367. So a lot of things going to be shaken, a lot of things going to be rolling before the end of the day. We also have earnings after the day. After the close today. So we're going to see a lot of action, a lot of volatility as we go through the rest of this day. So, well, let's go ahead and update everything and start looking at the volume. Of course, fairly light volume through pretty much all the day. We're off 6 points, almost 7 points on the S&P cash, just 1.8 billion shares. Probably going to have a lot in the last 30 minutes of the day. Be very interesting as they come out. But we had one big dissent from one of the Fed governors. And normally they try to, well, it was actually 10-2. Bullard and George are dissenting. That pretty much suggests that the bearish and are not the dovish camp is starting to wane. And looks like we'll probably see a tightening. The bond market had pretty much been saying that we would see tightening in September. I suspect that that's gone from about an 80% chance to a 95% chance today. Maybe even 97 or 8% chance that we're going to see Fed tightening in September. They're concerned with inflation, the balance, and just the bang for the buck that they're getting. Of course, we're seeing everything like 10-year notes, 2.2, 2.3%. Just a lot of things moving out here, and we'll get into the rest of the news. But again, this is just the first page of the book. Or maybe even the first chapter of the book that we're going to see today. A lot's going to depend on what is said in the Fed meeting, but look for gold, look for equities, probably to be off if nothing dramatically changes before the end of the day. And of course, we're going to see, I imagine, things like the VIX, and some of the other things really start to move strongly over the next hour, hour and a half, the rest of the day. Dollar index is up, 28 cents. S&P's off 7 now. Dow Industrial's off 63. I think I saw a minus 80 there for a while. This is going to cool down for a little bit. Everybody's going to tell us it doesn't mean anything, and then we're going to go back to the Fed. What do they call the question and answer period? But it will be a lot of rocking and rolling here. I was just looking to see if we've got any stocks making any significant moves. Probably the one I see that is significant, at least on the broader side of the market, is Apple is off $5 today. It's staying well under that 435. Apple looks like it could go to the 400 mark for expiration. Some of the other ones that we have are still strong. Google's up $5 as we speak, but some of these others have come off their highs, and I suspect we're going to see weakness through the rest of the day. We're also going to see a lot of other things start to move, and we'll be talking about it today. Yeah, Google's up $6 now. kind of interesting. Got some news that we'll get to quickly as I'm watching some of the trades I have on here too. So I'm pulling double duty today. Normally not looking for such a big move. But Men's Warehouse are the ones that say you're going to like the way you look. I guarantee it. They got rid of their spokesman. He owned 3.5%. Most people thought he was the CEO. He has not been for 2 years. They basically forced him out on the day where they're going to have the stockholders meeting. And it looks like there's a lot of tumult in the boardroom there. He was the chairman and basically forced him out. But it looks from like his comments that some of the big fund managers out there didn't like what he had to say. I think he kind of liked running the company the way it had been running for some 30 years, and they want to cash out. And that means probably doing things like closing stores, doing a lot of other things that he wanted no part of. And they got tired of him saying no and kicked him out. Other things in there, Microsoft, and this is more of an issue tomorrow with Facebook and some of the stuff they've got coming out. On Monday, Skype released a new version of their software that gave you an option for video mail. I think this is going to be very close to what we're going to see in an announcement tomorrow from Facebook. They have Instagram, and it looks like they're going to have a kind of short bite-sized video to go along with Facebook. So we're seeing a little bit of that. I haven't really seen Facebook move that much earlier today, but let's take a quick look. Facebook's up 23 cents. So no big deal. Probably when we know a little bit more about what is truly going on, that will be a much bigger deal. And let's see, go ahead and refresh here. We're off 4 points on the S&P cash. Again, no dip can be left alone. It's got to be bought no matter what the Fed says out here. But we've got just a huge move out here in the VIX. Which is kind of surprising for me. They really have taken this thing off when you would think that we would see a great deal more out of here. Of course, a dollar move much bigger out here also. But I don't know. I think this is going to be short-lived. Other things in the news out here, Amazon is moving to Tampa. And that is pretty much a deal that they made fairly early up here. We've got Jason from Hawaii calling, and we're going to go to him right now. How you doing today, Jason?
Hey, aloha. Yeah, thanks for taking my call. How are you?
You bet. Fantastic. What do you want to talk about today?
Xerox. So it hit new high, but with a low volume, so I'm thinking of taking a short position. The market looks like it's also running on the top as well.
Yeah, the problem is that I don't short. Well, let me put it this way. My opinion is I don't short stocks below $30.
Oh, okay.
The problem is that you get one piece of news out here, it can certainly blow you out, and the volatility is normally just way too high for that kind of the action. But if you just do the numbers and over time you'll look at stocks, the chances of you losing on stocks below about $30 is greatly exaggerated over those above $30. In fact, I like $50, and probably the best ones are $100 and $200 stocks when you can get cheap options on them. If you actually want to go short. But, I see what you're looking at. Volume's off about 25% up here at the highs. Again, I would have liked to seen the energy going back into this high really drop. You had some fairly decent energy yesterday. And so normally I would have liked to seen yesterday be about 10 million shares. And it's not. It's pretty much a great deal more as we see. So, is there?
That's a good advice.
What's that?
That's a good advice. I didn't check. I didn't look at the price of the stocks. I kind of look at the
the
company.
the problem with $10 stocks is that someone can come along and say tomorrow that they're talking about buying them out, and suddenly it's $15, right?
Yes.
And
Right.
you're out 50% already, and that happens far too often, especially when stocks look weak. All it takes is one phony rumor, and that you're stopped out. And IBM, probably your chances of shorting it, making money, may be a tiny bit less, but most likely it's only going to go up $10, right? Maybe 5% or something. Where you have a chance of a 50% loss or even more or greater on a stock that's like $10. Because how many times have you seen a $10 stock go to 15 or 20 in a couple of days? But you don't see Apple or Google go from $800 to $1,600 the next day. See what I'm saying?
Right.
So you just don't have that kind of movement in it, and that's why going to about $30 is probably the best thing.
Okay. Thanks for the advice.
You bet. Now, we're seeing some massive movements out here that don't make a lot of sense, especially the VIX coming off. To me, that would have been just the opposite reaction, and kind of stumped out here on why we've seen such a huge move out here in the VIX. But maybe some people were expecting a whole lot different out here, but let's see what we have. Well, I'm still dragging here. At least my quote system's a little bit delayed on the VIX, but still rather funny reaction out here. We're at 1649, just off 3 points on the S&P cash. We went to a low of 1642 on the announcement, and my guess is that everybody wants to keep this market as flat as possible. But I suspect we're going to see a great deal more before the end of the day. It is options expiration week. There may be a lot of people that have a lot of concerned interest in holding this market up, at least for the next few days. But we'll continue on. Let me see what I wanted to see if I can start reading some of the text out of here. VIX is a wolf in sheep's clothing. Yeah, it's normally thought as a fear gauge, and to me, the idea that this market would not be pulling back on more Fed's dissenting, governors dissenting, seems illogical, to use Spock's words. We'll be right back after this short timeout. You can always give me a call at 877-927-6648.
The Art of Timing the Trade Charts has officially launched at TFNN. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind software, The Art of Timing the Trade Charts allows you to scan for Fibonacci formation setups, including Gartley's, butterflies, ABCs, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the market for stocks just beginning to form the trading patterns that many investors spend days, weeks, and even months searching to find. As part of our introductory pricing, we're offering licenses available at only $59 per month. We're so confident that you'll love this new outstanding piece of charting software that we'll even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Lock in your low price today by ordering your copy at TFNN.com.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, David White, Larry Pezzamento, Andy Hecht, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor, Foresight Fund Services, LLC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
McEwen Mining is a high-growth, mid-tier producer in the Americas with a market capitalization of $1 billion. Experienced mining executive Rob McEwen, as chairman, CEO, and president, owns 25% of the outstanding shares of McEwen Mining and has put in place an ambitious business plan with the goal of qualifying for inclusion in the S&P 500 by 2015. With $70 million in cash and liquid assets as of the end of 2012 and completely debt-free, McEwen Mining is poised for growth. Production in 2013 is forecasted to grow at 24%, reaching 130,000 gold equivalent ounces, and over the next 3 years, McEwen Mining projects that their production will increase to 290,000 gold equivalent ounces, almost a threefold increase from last year's totals. If you'd like to find out more about McEwen Mining, click on their banner on the front page of TFNN.com or check them out on the NYSE or TSX under the symbol MUX.
Dave takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
S&P off 6, NASDAQ off 8, crude's up 18 cents, gold, it's up 1, it's flat, 1368, Dow's off 70. We had a little bounce for a little while where they tried to push the market up. It looks like it's rolling back over. My guess is that unless there is some drop the chalupa language at 2:30 in 6 minutes, we're going to see this market start to move down. I saw what is most likely a deliberate high-frequency attack on the VIX. It looks to me like they went and ran just about everything they could. I would be surprised if VIX does not end up being unchanged on the day by the time we close. Looks very interesting and very suspicious when I was looking at the data out here. Of course, why is the VIX very important to us right now, besides putting a little bit of the price into options? The real reason is as the VIX rises, because 80% of funds out here that are under the new financial laws have to show some level of risk management, and that ended up being a thing called a value-added risk. As the VIX moves higher, they are forced, if they're in a position where they have a lot of stock already, to automatically start selling. So not only do they have to start selling if they don't want to to maintain the levels of value at risk. But at the same time, they may want to sell just because they think stocks are going down. Of course, if they sell because the stock's going down, that means other fund buyers who may want to hold may have to actually start liquidating too. I suspect this is the fallacy of the market that can remain up here at highs forever. It can, as long as the volatility remains extremely low. I think the Treasury and the Fed have done everything they could. The problem always comes to be that it is a fragile system, and the longer that you hold fragile systems in some kind of state where they don't move, the chances that when they do move, it will be huge and breaking. So, we're up, 2% on the, on the 10? So we've got just a huge amount of volatility out here. Yeah, 2.28 on the 10, up 10 cents on the day. I suspect we're going to see a lot more of that and very fast markets for the last hour and a half and through expiration. Was Tom? I'm going to have to check it. Was Tom doing his webinar in the next couple of days on playing White Lightning? I think this may be the absolute perfect time for him to go ahead and about playing options during expiration week. This is going to be a quad expiration on Friday, which is going to add probably a lot more volatility than most people thought. But it's going to be a very interesting day out here. We up and it got 2 billion shares so far. So volume is finally starting to pick up. We are starting to see some decent movement out here, especially in the dollar index and some of those. See. Let's take a look at here. Yeah, up 21 cents on the, actually up 52 cents on the dollar index. I suspect this thing is going to be up in the 84 level over the next few days. I imagine we're probably going to see a very sharp move in that dollar. Other things that was very interesting to me was copper still has not come off the floor. It's off a little today, but it still not seeing any kind of movement in these industrials that we see. Gold off $1.70, $2 now. I think we're probably also going to see in the next few days a spike down in gold. And if we were thinking about buying it, that may be the final shoe to drop in forcing Paulson out of his gold market. So a lot of opportunities and chances out here for a fast moving market. But of course, we've got just about a minute or so before we get back in to the Fed's question and answer system. And that's probably going to tell us a lot more about what's going on today. Doing a lot of tap dancing out here in the markets because they are, of course, going to be very fast moving. But you can always give me a call when we come back at 877-927-6648.
Tom O'Brien's daily newsletter, Market Insights, gives you Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. With Market Insights, nothing is left to guessing. With the market at record levels, volatility is here, and now is a perfect time to take advantage of a 2-week free trial to Tom O'Brien's daily newsletter, Market Insights. As recently as March 26th, Tom advised his subscribers to liquidate their 4 short-term equity holdings, closing out all 4 positions for a combined 15.9% profit. And on April 1st, Tom advised his clients to sell their longer-term position in AIG warrants, locking in more than a 40% profit in just that one trade. If you'd like to see the kind of newsletter Tom O'Brien sends out to his subscribers each morning, then sign up for your 2-week free trial to Market Insights today by visiting the front page of TFNN.com.
No matter where you listen to TFNN programming, we want you to know you can always access your favorite shows on demand through TFNN.com. TFNN airs live programming every market day from 9 a.m. till 6 p.m. Eastern, and you can view each program by accessing Tiger TV through our homepage. We even have an easy link for all mobile devices, including iPhones and iPads, located at the top right-hand corner of the TFNN homepage. You can use your smartphone to view Tiger TV, but if you don't have a mobile connection that can keep up with streaming live video, then you can simply visit TFNN.mobi in the browser of your smartphone for live streaming audio of all of our programs. The mission of TFNN is to educate our audience directly and interactively through our interactive website and radio call and talk shows. TFNN is able to teach all levels of investors the technical skills needed to trade in today's marketplace. In order to get the best information possible, TFNN has assembled the most respected financial minds in the country to provide the most current news and comprehensive advice available. TFNN.com. Educating investors.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's Nadex.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Well, we've got a lot of movement in the VIX. We've got a lot of movement in the broad indexes. We're off 7 points now on the S&P. I suspect we're going to see this kind of high volatility for a while. It looks to me like there was some kind of flash crash in the VIX futures, and it looks like the high-frequency boys were at it. I would not be surprised to see this show up unchanged before the end of the day or even higher. But we'll watch it out here. It looks to me like at least on the VIX today, we're seeing some gaming of what was going on. And this, of course, VIX goes a little higher into some of these things, but it will come back in line depending on what the market is actually doing. But it looks like there's a lot of effort to keep the market as flat as possible. And part of that may be options expiration this week. I imagine any move we have between now and Friday is going to be muted. At that point, we're probably going to see the fruits of this Fed meeting. At the moment, Ben Bernanke, Gentle Ben, is still reading his prepared remarks, there's not a lot that's going to be a surprise in this. What will happen is maybe what he says during the question and answer period, which has not started yet. So I don't expect a lot out here. Basically, they're saying inflation's very low, employment's probably a little too high, but don't look for a whole lot. I think what everybody's going to be shaking their heads about are the two dissenting opinions, and I think we're going to hear a great deal about that in the next 2 days. They strive extremely hard to make sure there's a unanimous front, and when they don't get it, it tells you that there's some with a very strong opinions, and my guess is from the people that were the dissenting opinions, they're suspecting that the continuing of QE has a lot more risk than reward. We've been talking on this show about how I think we've been in a rather large bubble for a while, probably since right after Christmas, and that unfortunately bubbles, you're not exactly sure when they're going to bust. You know they're going to bust. But the question is how long they can hang out without cracking. This has been fairly extensive and fairly long. We're up here on very, very light volume. We might carry that today. And, of course, just huge movements in the Dow. But that's not surprising. I'm going to be very interested in how the S&P and the NASDAQ perform. We just had a nice pop here with a Ben Bernanke. What did he say? They're thresholds, not triggers, so that we don't have to do it right now. But we'll continue to see how this plays out. The bulls, of course, will take everything and decide that it's time to pull the trigger long. Normally you get a false move down, a false move, the first move after the announcement is one way, then you get kind of a counter move, then it decides to come back down the other side, and normally that's the one you want to be watching at here. So we'll be trying to see, but it looks to me like there is a lot of effort going on to stabilize this market, maybe because of options expiration. They don't want this market really to go very far down over the next couple of days, but I suspect that we'll see a little bit more out of that. Continuing watching some of the movement in the financials out here, up 54 cents on King Dollar on the dollar index, and still off a buck on gold. Kind of surprising we didn't see a lot bigger move on gold, but we'll have to see what happens overnight. I have a feeling that gold will probably tell a lot more truth probably by tomorrow morning than it is telling us right now. But we're going to continue to see just how fast this market can move. And my guess is it's going to be 10-point swings up and down before the end of the day, at least in the S&P futures. So get ready for some huge volatility and for quotes to start lagging. When they're moving this fast, it's not going to be uncommon to see just that. And that is a very fast movements in the quotes. Again, you can give me a call at 877-927-6648. That's 877-927-6648. We're going to start taking a look and seeing how some of these stocks have responded. Apple was probably the most interesting out here. They're continuing to try to push the market, especially NASDAQ stocks, and ones like Amazon was up to almost 283 and some change out here. It's off 47 cents now. Apple, of course, at 427, off $4. It's been as low as 425.55 today, and I suspect we're going to see that challenged before the end of the day out here too. We've got like a little Gartley right now set up in Apple. It's pretty much at this price where you would want to pick this thing up long. It doesn't really look that bad. the options have been pointing more and more to around 450. And could they push Apple up the next few days to that? The answer is yes. I have a feeling it has a lot more to do with the market and thinking that 395 is a lot closer than 450 on Apple. Not a lot of volume in any of these stocks so far yet today, and that's going to be probably the key. Can they keep the movement on these stocks from stalling out and creating it? And we're just going to see, I think, more and more movement in the dollar indexes out here today. We'll take a quick look at IBM and see how it's working out. Let's see. IBM, which has been kind of interesting over the last couple of days, it has, they've been trying to push this thing up. Where's my IBM? 203.90, so it's off 97 cents, off a buck now. 1.5 million shares. The question is whether or not this thing was setting up some kind of ABC. I was hoping that we get just a little higher out here today, but it could be setting up one ABC. High probability that it comes back and tests the April 22nd low at 187.68. A volume is flying out here, 2.2 billion shares on the consolidated tape right now. We're just down 3 on the S&P cash as we speak. We're starting to get questions from CNBC's Steve Leisman at the moment, and people kind of volunteer. It's only simply a clarification, helping people to think about where their policy will evolve. I was thought about it might be best for me to explain it to this group. And questions, future policy statements. Anyway, I'm watching what Gentle Ben is saying out here. But we're off 42 points on the Dow as we speak, and be interesting, off 3.5 points on the S&P. Suspect we're probably going to stay in this 1645 to 1650 range until Ben is done answering questions, unless he comes out with a whopper. My guess is that he's going to say a lot of nothing and let the policy statements stand for themselves. But the additional or the original movement in these stocks is probably the correct one. I suspect we close right at 1636 is my pick for the close of the day. That would be at the top level of support in this market, and looks to me like we want to head back down to 1600 for Friday's expiration close, but a lot will be based on, at least the very short term, based on what Gentle Ben is speaking about. Of course, always interesting to be trading and talking on the radio at the exact same times. Again, you can give me a call at 877-927-6648. Volume is flying out here since the press conference started, about 200 million shares. So it is a very liquid situation. I'm going to be watching the dollar index, probably the strongest of all. We are up 67 cents on it. This first reaction and the volume behind it while I'm watching the contracts fly by would suggest that this thing is probably headed up to 84 fairly quickly, and we're going to start seeing some weakness in the market associated with a stronger dollar, probably based on the 2 dissenting votes today. And I think even though it isn't very strong, kind of a little bit more hawkish tone from the press release out here. We've got Mac from Colorado. How you doing today, Mac?
Hi, David. Thanks for taking my call.
What do you want to talk about today?
Well, I just started taking Technology Insider, right?
Mm-hmm.
And on one of your picks, maybe I didn't understand what long volatility with an $8 or better.
Why don't you email me at path@tfnn.com, and we'll get into what's in the newsletter, since basically that's what people are paying for.
All right.
Okay,
thanks a lot.
and I'll be glad to answer any question you have at length in that. We're going to see some volatility out here today. I suspect that the VIX will close flat by the end of the day.
All right, thanks, David.
Okay. But anyway, we've got a day where it looks like we've got a lot of people pushing on this marketplace, and it looks to me like we've seen some very strong high-frequency trading. And, of course, this is where they're going to make a great deal of money on these kind of days. And my guess is that they're going to continue to try to push this around. Some of the big guys are going to want the volatility to remain fairly low. And I think what we are witnessing today is a little bit of that stomp on volatility. So we will be keeping an eye out on that. But what else do we have going on? That is okay. I'm looking at a few other things out here. We still have market looking fairly weak. IBM is off $1.43 today. I'm going to be looking at some of these bigger cap stocks out here. Amazon still off 48 cents. Don't really see any huge move. Google is the strongest, 908.26 on the last tick. This thing is up fairly strong, pretty much holding up the rest of the NASDAQ moves. We're off 6 cents on Microsoft, off 11 cents on Intel. Now, looking at most of the less expensive stocks out there, I don't see a great deal of that out here. What else do we have? Google, Facebook. Facebook's up 27 cents. No big deal out here. And continuing to watch Ben Bernanke as we speak. We're going to look at a few other stocks here that I've been tracking. I think this is going to quiet down unless he drops the big chalupa out here. Let's got to go out here. Looking at a few other stocks we've been talking about in the newsletters. One of them is Angie's List. ANGI is a symbol on this. This one's been up here very, very light. It's made a triple top. The volume has been very light compared to, they had some nice earnings out here. That came out on April 25th. They had a 7 million share move, pretty short. This thing is getting awful close to where I'm going to start thinking that we're going to start seeing some of those locked up shares from the IPO come back into the market. I think that they've done a very well, fairly decent job of holding this thing up. So we probably haven't seen many of those shares come to market yet. I think that as they do, probably going to see some weakness back into the stock. Probably a good indication this thing wants to come back into that $20 level. Bed Bath & Beyond, another one up here hanging out, and I think these are one of the ones that you want to be watching today. Bed Bath & Beyond, basically going after these the last September 17th high that had 3.6 million shares, $71.61. Going to be very interesting. That is of trying to fill a gap. Hopefully you're watching on Tiger TV or in the Den. But these are ones that you're going to be wanting to see how they react before the end of the day. Probably the most vulnerable to both bounces and coming up and down. What else do we have out here? CPA. Copa Holdings. I'm going to find out a little bit more about this one here. This one's a little high flyer out here. It has gone to a much higher high on about half of the volume. Copa Holdings symbol is CPA. Had its last major high out here, $140.89 with 660,000 shares. We got into it with about half that over the last few days. Airline and passenger cargo services in Latin America. Interesting. We'll be back in just a minute.
Patterns, profits, and peace of mind.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's trading newsletter.
Patterns, profits, and peace of mind.
In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the Forex market, and more. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you the edge you've been looking for. Try patterns, profits, and peace of mind. Absolutely free for 2 full weeks. That's an $85 value. Yours free when you register right now.
Get Larry's patterns, profits, and peace of mind.
And get the edge you've been looking for.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
We've got some funny business going on. Market decided to head back down pretty much in the exact same time that Ben Bernanke basically said that the problems that the economy have are not based on what we have and what the Fed is doing, but fiscal policy. I suspect we kind of heard that before, but I have a feeling that that is the friction behind Ben Bernanke being fired on the Charlie Rose show, rather in I can't even say it today, in his well, I'll go on. Rather publicly, kind of the equivalent of the firing squad to come out and give a half-hearted endorsement of him. I suspect that they had already had the phone call, and it was President Obama's preemptive strike to let everybody know he wasn't going to be around for a while. But we're pretty much rolling the lows of the day, and I think that we're going to see, at least through the rest of his tenure, the discussion that it is not the Fed's fault anymore, that it has to do with the president and Congress, and that he can only do so much. We're off 104 on the Dow as we speak. The futures have always been pointing to a close back below 1,600, and we'll be looking exactly how that plays out. But there are some great Gartley patterns out there in the marketplace. I took one in my daily newsletter yesterday. Probably be talking about that in a few days as it develops. But I think we've talked about it on the air, and for those that listen closely, I think you had a great opportunity to get in one of the most low-risk trades available. Maybe we'll talk about it on Friday's show with Tom. But very, very nice setups. Of course, you can still get the intro price for the Art of Timing the Trade charts. Go to the front page of TFNN and check it out. A few other stocks out here that were very interesting to me. The weakest right now, which made me think this market was BBRY, was headed lower before we came in, was Research in Motion. People had been selling this off early in the morning. This has been pumped multiple times by Kramer on CNBC. I've never understood why he thought this thing was coming back. And it is just what you expect in it. They did come out with their latest phone. This thing's not moving very much, but I'm looking at this thing to come back to $13, probably by expiration out here. So you might see some very nice movement in BBRY. Of course, it's still like 40% short, so I'm not saying everybody hump back on this. But look at some of the weakest stocks out here. I think that and some of the movements that we're going to see, like in the VIX. And again, at the beginning of the show, I said, don't be surprised if this thing comes out and ends up being flat on the day. It looked to me very much like we had some high-frequency people run the tables on the VIX here to wash everybody out early in the day. This thing, I think, could easily get back and onto the positive side by the end of the day. We're also watching those numbers on the dollar index, now up 86 cents on the dollar index. We're continuing probably to see some weakness in gold, now off $9.40. But someone has pulled the plug on the bathtub, and we're swirling the drain here. But look for 1636 on the S&P cash to be the first level of support as we rode and finish up this day. It's going to be interesting. I'll be here trading in the den. And it looks like everybody else has joined. Steve Rhodes, Tom O'Brien. It looks like everybody's climbing in the den here to see the market roll up today. See you tomorrow. Same bat channel, same bat time.